Hello, Orlando. I'm going to give you today 5 things that you need to make sure that you try not to discuss with your lender, and 5 things that you better discuss with your lender. This is extremely important that you do these things so that you can get set up for success. So starting off with the 5 that you don't need to do is, first of all, this is really tough, but don't give us any misleading information. We need to have some really big transparency with this stuff, because if we find out after the fact about whatever it is that we didn't hear in the initial part, it can cause all sorts of problems when we're doing the application. If we can find out about this information ahead of time, many times we can find a way to do what's called structure the file, which is find ways to get around it so that we don't have to let the underwriter find it and then get a surprise later. So it's a good idea that if you have any information that we're asking you about because we've seen it either on your credit report or we've seen it somewhere else, that you kind of let us know what it is that's going on so that we can make sure to represent it correctly and structure the file correctly so that we can show what we need to show, explain what we need to explain, and make sure that we set you up for success. That's a really big piece. So item number 1 is don't give me any misleading information. Item number 2 is if you have any plans on changing the job or you have any plans on making things different in your life, and we know that life comes at you hard and comes at you fast, and sometimes you're making decisions that are good for you and your family, but sometimes those decisions can create some financial havoc. For example, if you decide to change jobs and you want to go into, you're working a salary position and all of a sudden you want to work and go into a W-2, from a W-2 into a 1099, or even better yet, you've had this great, fantastic business idea and you want to go into self-employed. While all that's fine, what you need to understand is that when you start making changes to your job or start making changes to your career, everything stops until we understand what it is that's going on in your file. Because we have to be able to look into the future and predict what it is that you're going to be making so that we can help you buy this house, because we have to forecast and be able to predict that long term you're going to be able to make the payments. These are actually really important pieces, because if you're going from a stable salary position into 100% commission, your opportunity might be through the roof. It might be amazing. But the problem with it is it can also go down. And you can have some instability in your income. Some days will be high, some days will be low. And we have to see a period of time. The longer and the more volatile your income is, the more likely we are going to have a longer period of time necessary for us to see this. What that means is if you're going from salary to commission, we need a minimum of 1 year. So if you tell me that you're making a change and you're going to be going to a full commission position, guess what? Everything's on hold. The same thing as if you're going into self-employment. Actually makes it a little harder, because the way that Fannie Mae and Freddie Mac have it set up is they require that we have a longer period of time, usually 2 full cycles or 2 full years of tax returns, because the tax return is the only official document that we can use to identify the income of a self-employed buyer. That's a really big deal, because that can put everything on ice until you have that timeline behind you. If you're planning on doing any of those job changes that are going from real predictable income to not so predictable income, do it after closing. You'd be way further ahead. At that point in time, you already own the home. Don't tell us you're going to make those changes, because quite frankly, that's going to stop everything. Another thing that you want to make sure that you hold off on and don't really necessarily bring a whole lot to light is larger purchases. For example, if you have a need for a car, that's fantastic. Everybody needs a car to be able to get around and be able to do what they need to do to be able to survive and commute. And maybe if you're not working from home, you need to have a vehicle to get around. Or maybe you have other things that you're going to be purchasing with credit. Anything that's purchased with credit, if you do it during the transaction, we have to stop. We have to understand how that impacts your ability to repay the loan, and it impacts the debt to income proportion, which is the most important mathematical equation that we have to put together to see if you can afford this new home. So these are really big deals. It's a really good idea that if you're planning on buying any furniture, if you're planning on buying a car, if you're doing anything like that, that you put it off until after closing and that you don't tell us a whole lot about it, because quite frankly, it could stop things, because we have to make sure that your debt proportion works with all of the debt, including the new house. That's a big deal. Another thing that's a good idea that not necessarily share a whole lot about, item number 4, undisclosed obligations. For example, if mom and dad have lent you some money to go to school and you're kind of paying it back at your own pace, but there's no real documentation to support that other than a handshake agreement and a hug, well, guess what? You don't necessarily have to share that with us. Now, they are going to be looking at your bank statements fairly regularly for us to determine what's going on with your bank statements, so that if they see a consistent withdrawal going to mom and dad, they're going to ask some questions. But you don't necessarily have to, if you're only making a payment every now and then to mom and dad, you don't necessarily have to disclose that, because that's not necessarily relevant to what we're doing. It's a handshake agreement between you and mom, you and dad, maybe it's a hug, whatever else it is that you've got going there. They're not charging you any interest. If we know more about it, we're going to have to get some official documentation, and we're going to have to include a payment, which once again goes down with your debt to income proportion. So that's item number 4. If you have any undisclosed loans like that, keep them a little quiet, don't necessarily need to know about them. Another one, a 5th one, is if you're doing cash work. I have some people who periodically go and mow lawns for cash on the weekends, or maybe they have a garage band that they're playing gigs on Saturday nights. Those are all fantastic, but if you're not reporting the income, we don't necessarily need to hear about it, because we don't want to have to go through the process of setting up debt to incomes on that and then figuring out what tax implications are going to be and other factors that go along with those parts and pieces. So there's the 5 right there to kind of help you understand what not necessarily to share with us. Now, here are 5 that you really do need to share with us, and this is extremely important, just as important as the other one. Number 1, on your credit report, we're going to be looking at your credit report and deciding what exactly is going on there. Now, many times I've looked at people's credit reports, not everything is theirs. And it doesn't necessarily mean that there's identity theft going on, even though that's something that we are checking for. What we're looking for as well is maybe you're a junior or a first or a second or a third. If you're the OG, maybe there's something else going on that might be going on your credit report. But many times I've seen where dad's loans end up on junior's loans. Well, guess what? Unless we go through that credit report, we're not going to see it and understand it. And these can all be items that are either credit cards or collections or judgments or other items like that that could be showing up that may not necessarily be yours. Or maybe they are yours and we need a little bit of an explanation. I had one recently where somebody was 30 days consistently behind on their car payment. They got 1 month behind and they kept making their payments on time, but they were always 1 month behind. A really good explanation about that would help us understand that it's not a matter of lack of credit worthiness that's going on here. It's really just that the report never truly caught up. So these are parts and pieces that are pretty important for you to explain to us and make sure that we're getting it correct. Another one that's a really good, so number 2, another one that is really good for you to tell us about is if you're expecting some kind of cash windfall or financial windfall, or expecting big deposits, because there are a variety of ways that we have to do certain things. For example, if you're selling a boat or you're selling a car or you're selling some form of item that you're planning on using towards a down payment or the closing costs, there's a very specific process that we have to go through. We have to make sure that the car was truly yours, so we're going to need a copy of your title. We're going to need a bill of sale to prove that you actually did sell this and for how much. And then we're going to go to Kelley Blue Book and figure out how much that thing was worth so that you're not overinflating the value to having sold and earned this extra money. This is really big. So that's a really big piece. We have to have a provable trail so that we can prove that you're not laundering money and selling pharmaceuticals on the corner. Big deal. We want to make sure that this money is something that is actually really provable and that it truly was yours and that we can make that work. Number 3, these are really big and important pieces. If you're planning on job changes in the next 3 or 4 months down the road, that's okay. We talked about that previously. Do it after closing. But let's say you've had 3 or 4 more jobs in the last 12 months. Well, that can be a sign of instability. And if you had recent job changes, 3 or more in the last 12 months, we need a really good explanation as to why you made these changes. If there is instability, like, you got fired 3 or 4 times in a row, then that's going to be a problem because that shows instability in the workplace. However, if you just kept on getting better offers and things start improving and getting better for you over time, that's not necessarily a problem. That's actually a good thing. We just need to be able to identify that and be able to explain it so that we can show that progression. Maybe it was a lifestyle improvement, maybe the hours were better, or maybe the pay was better, or maybe you went from less predictable to more predictable, so less commission, more salary. These are all parts and pieces that play a huge role in us being able to put the pieces together and structure the file in such a way to where we can make you successful in your home purchase. Number 4, a big one that is a big deal right here is going to be life changes. For example, if you're going through a divorce, that's a big deal. We're sorry that you're having to go through that, but there are implications that go along with a divorce. For example, child support, separation agreement, separation of goods, other items that could be happening with this. There could be judgments on your record, other things like that. We need to know about some of these things that might be coming so that we can give you a really good idea of what you need to be doing. Whether you need to be holding off, whether you need to be moving forward, whether we need to have some documentation to support it. Because voluntary child support is very different than court-ordered child support. Voluntary child support needs a much longer time frame for us to be able to use that income than if we have a court-ordered one. These are really big and important pieces. Now 5, on to what you need to do, you need to be transparent. Share with us as much as you can without putting your foot in your mouth, and give us the best idea possible on how to set you up for success, because remember, we want to make sure that you're successful in this transaction. And as you're moving into the Orlando area, this is fantastic. We'd love to hear more about this from you and love to hear more from you as far as what you think about this. And so give me a like down below here. Go down to my link. There's a free link down at the bottom here where we can give you an update on information on the Orlando area. Love to have you come and visit. It's all free, by the way. I don't know if I mentioned that or not, but that's really important. Go down into the bio or into the links down below and click on this and go take a look at for free all the information that is available to you if you're moving to the Orlando area. Love an opportunity to chat with you, so give us a call, give us a like, give us a thumbs up. Thank you for the opportunity to serve you and your family in your next home.